This is Matthew Cratter from Bitcoin University, and today I wanted to talk about are Bitcoin futures ETF safe? We'll also be talking about Bitcoin-backed mutual funds. I got this question from S. Morgan 125. What do you think about BTCFX? Well, BTCFX is a mutual fund that is issued by ProFunds, and it's backed by Bitcoin futures, as we're going to see. So we have BTCFX, that's a mutual fund that invests in Bitcoin futures. We have BITO, which has been around for a while, an ETF that invests in Bitcoin futures as well, which is quite dumb. We have BITX, an ETF that uses leverage to invest in Bitcoin futures, which is even dumber. For those of you who don't know, ETF just stands for Exchange Traded Fund. It's something that trades like a stock. You can buy it in your brokerage account, but it's usually backed by something different than equity in a single company. It may be backed by an index, a basket of stocks. It may be backed by something like gold, like the GLD ETF is, etc. But that's what an ETF is. And ETFs in general have lower fees and are a little bit more flexible than mutual funds. ETFs trade all day long. Mutual funds basically settle at an end of day price. Now it's important to notice, and this is the most important point of this video, that Bitcoin products, Bitcoin tracking products, ETFs, mutual funds that are backed by Bitcoin futures will almost always bleed a lot of value over time and will fail massively in many cases to track the price performance of real BTC, of real Bitcoin. And this is due to the fact that Bitcoin futures almost always trade in what's called contango. Contango in futures just means that more distant months trade at a premium to near months. So if we take a look at the CME, the Chicago Mercantile Exchange, and their data for Bitcoin futures, we can see on the left here we have the settlement months, August 2023, September 2023, and they really go out until next year, though we can see there's not a lot of liquidity once you get into January of next year. So you have the different months, the different expirations, and then you have the settlement prices. And if we take a look at this snapshot from last Friday, we can see how there is contango in the Bitcoin futures curve. So the August 2023 settled at 26,020. The September 2023 settled at 26,265. And we can see that the price just keeps going up as you go out. Now, normally contango is driven by a combination of storage costs, which in the case of Bitcoin is virtually nil, since Bitcoin is very easy to store and custody, even for institutional investors. It's also driven by interest rates and the opportunity cost of your money. But you almost always have interest rates, you almost always have futures prices for Bitcoin in contango. In other words, the curve looks something like this, where you have it over time, and then you have the price, and this is what contango looks like. So if we take a look at what exactly the negative carry is from this, we'll just take a look at August prices here and September prices, and September price here was 26,265. The August price was 26,020, as we said. So basically, if you buy the September futures and you hold them until they become the front month, you're bleeding approximately $245 per contract. And if we just divide that into the September price of Bitcoin, we can see that the negative carry, in other words, the carrying costs, which in this case are negative, is approximately 1% lost every month, 0.93%. So just a little bit less than 1%. If you annualize that just by multiplying it by 12, I believe is what I did here, and that may not be the best way to analyze it, but it gives you an idea. That's approximately 11% lost every year, assuming the contango stays the same. And the contango will move around a little bit, especially depending on what the Fed does with interest rates. And so now you add in the mutual fund fees, approximately 1.15% in fees and net fees, and you can now see why BTCFX is doomed to underperform holding Bitcoin, because you're bleeding all this money over time. And when the Bitcoin futures curve is in a state of contango, as we said it almost always is, a Bitcoin futures ETF or mutual fund will structurally always be doing a very bad investment thing, which is buying high and selling low, because what they do is they'll be rolling their position into a month or two out, and then they'll hold it for a while, and that will basically slide down the curve and will approach the front futures month or the spot price. If you're finding this video helpful so far, I just ask you to hit that subscribe button. That really helps this channel's reach and helps to get the word out. Also hit the like button and leave a question, comment, suggestion for a future video. If we take a look at BTCFX and what they're holding, we can see here that this is exactly what they're doing. So this was a snapshot from a couple weeks back, but they had about 34 million, 35 million worth of Bitcoin futures notional value for July of 2023. And then they had 17.6 million worth of the August futures. So what they're doing is over time, they will slowly be selling these July futures and buying the August futures. So essentially they're selling low, buying high, and these August futures will then continue as they approach maturity. They will approach the spot price. They'll basically slide down. The contango curve is one way of talking about it. And so the problem with this is if you're running a mutual fund like this where you have exposure, you're basically always going to be buying high and selling low. And this is a great way to keep losing money, certainly. If we take a look at Bitcoin's performance year to date in 2023, it's up approximately 56, 57%. And then if we take a look at BTCFX, we can see how much it has failed to track Bitcoin's price. It's only up 29.5%. So this is massive underperformance. This suggests that the contango was a little more extreme even earlier this year. I'm not sure why it's underperforming quite as much as it is. It's underperforming by a lot more than just 1,200 basis points or 12%. If we take a look at the BITO ETF, which is also backed by Bitcoin futures, and take a look at its annual performance, we can see Bitcoin spot again up about 56, 57%, and then BITO only up 28.5, 29%. So this is not a mutual fund, but this is a Bitcoin futures backed ETF that's also underperforming. If we take a look at a leveraged Bitcoin futures ETF, this is BITX, it's massively underperforming. It only was issued in June, end of June of this year, so we don't have year-to-date results, but basically we can see over that period of time, Bitcoin has fallen 15%, and this leveraged ETF has fallen almost 33%. This has to do with that way leveraged ETFs compound, because you get these moves daily, and the way they compound can lead to even larger losses. So this is why you should be very careful with double or triple leveraged ETFs, whether you're trading the gold one or the crude oil one or a Bitcoin one, because they do not track very exactly. They do provide good leverage over a trading day, just intraday, but if you begin to hold them overnight, you can have huge tracking error, as we saw here with Bitcoin being down 15% and this thing being down 33%. I discuss more about why leverage ETFs are so dangerous in this old video, which I'll link to in the description notes below. But basically, the only thing worse than a leveraged futures, an ETF backed by Bitcoin futures, would be one that uses some leverage as well. And then you end up with really terrible results like this. And even if Bitcoin had gone up, there's a good chance that BITX would have massively still underperformed. Here's the announcement I'll link to in the description notes below about when the SEC approved this first leveraged Bitcoin futures ETF in the US. And this really was absurd and unacceptable that these futures-backed Bitcoin products and even a leveraged futures Bitcoin ETF have been approved by the SEC before a Bitcoin spot ETF. Was this a political decision? We'll probably never know. Maybe it had to do with lobbying by the futures industry or something like that. But the thing is, Bitcoin futures being introduced first, perhaps they were introduced first since the price monitoring was much simpler, because you could get data from a single exchange just from the CME, and you didn't have to come up with some sort of price surveillance or price monitoring for multiple exchanges to determine the current price of Bitcoin sort of averaged across exchanges in the US. That could have been the other reason that futures ETFs were introduced first, since they were a little more simple in terms of price monitoring for the SEC to look for fraud and price manipulation, etc. Either way, though, is certainly not a good decision for the retail investors, because retail investors, they buy these leveraged ETFs, or even these ETFs or mutual funds backed by Bitcoin futures, and then they're probably quite surprised by how much they end up underperforming. It's only good for the company that issues this and collects fees. Now, fortunately, this is all about to change with the BlackRock Bitcoin Spot ETF, which I do expect to be approved in the next 3, 6, 12 months. The timeline's a little unclear at this point, but BlackRock is highly influential and connected and does the government a lot of favors. And so this is something I expect to definitely be approved. BlackRock would not have tried to launch something like this unless they had done a lot of due diligence and they felt that the time was right. And their timing is actually quite amazing. Coming into the Bitcoin halving in April or May of 2024, the Fed being mostly done hiking, they may be cutting, the market's beginning to price in Fed rate cuts sometime next year as well. So this really could be a confluence of events, and BlackRock is very, very smart, of course, and wants to profit from these sort of things. A lot of people saying, oh, BlackRock's going to end up controlling Bitcoin, etc., etc. First level, though, BlackRock wants to make a lot of money from Bitcoin, and we will talk about some of the FUD as well. BlackRock Bitcoin ETF, make no mistake, is going to be extremely bullish for Bitcoin's price, and it's also going to help to embed Bitcoin further in the global financial system because people will be more easily able to hold Bitcoin in their retirement accounts this way, and also institutional investors will be able to leverage this up and will be able to borrow against their holdings of this ETF in a way that is much easier than borrowing against Bitcoin, the spot, the real thing. Now, you yourself should just own Bitcoin itself and not mess around with a Bitcoin ETF that has multiple layers of counterparty risk. Even though it is a spot ETF, it will be a spot ETF, and it should track the price performance of Bitcoin quite closely after a little bit of fees, probably 0.5, 0.6% fees, which is fairly reasonable for something like this. But you don't want to have to pay those fees, and you also don't want to have to deal with the multiple layers of counterparty risk that ETFs always bring. So in this case, you're going to have counterparty risk from BlackRock itself if you're holding the BlackRock ETF, from Coinbase custody, which looks like it's going to be the custodian holding the actual Bitcoin, as well as the brokerage account in the company that controls that, in which you hold the ETF. These are all different levels at which the Bitcoin could be confiscated, or the investment product could be frozen or censored. When you hold the ETF, you can't send the Bitcoin over the Bitcoin network. You don't have those censorship resistant guarantees, etc. Holding Bitcoin itself on a hardware wallet like the ColdCard or Blockstream Jade is really the best way to go. So don't mess around with BTC futures, with BTC ETFs, with BTC trust products like GBTC, which turned out to be a disaster for many people, etc. It's very simple. Just buy BTC itself and withdraw it and hold it on a hardware wallet like the ColdCard or the Blockstream Jade. If you're not holding your own private keys by holding your Bitcoin on a hardware wallet, it's not really your Bitcoin, not your keys, not your coins. If you want to go a little bit deeper into the implications for Bitcoin and for BlackRock of this BlackRock Bitcoin ETF, I have a number of videos here where I talk about and answer questions like could BlackRock destroy Bitcoin, how Bitcoin changed BlackRock, what happens if BlackRock buys all the Bitcoin miners, BlackRock 51% attack, etc. I go into all the different details and all the fear, uncertainty, and doubt, all the FUD surrounding this. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.